Everyone knows that feeling, wanting to experience more stories, but struggling to find the time. That's where Audible changes everything. With over 1 million audiobooks and Audible originals, there's a story waiting to spark anyone's imagination. Take The Paris Apartment by Lucy Foley, the gripping psychological thriller that's keeping listeners on the edge of their seats. Imagine unraveling its mysteries during your morning commute, or losing yourself in its twists and turns while doing household chores. That's the magic of Audible. It transforms daily routines into opportunities for thrilling discoveries. The best part? Members get access to thousands of included titles, with new content added regularly. From bestsellers to hidden gems, every genre imaginable is at their fingertips. And with one easy-to-use app, switching between favorites or discovering new passions has never been simpler. There's more to imagine when you listen. Start a free 30-day Audible trial and get your first audiobook free at audible.com/Wondery. That's audible.com/Wondery.
In the time it takes you to actually board that flight from Group 8...
Now boarding Premier Altitude Elite Club members.
You could have bought a Hyundai on Amazon. Yes, that Amazon, where you buy everything else.
Mid-tier Altitude Elite, feel free to board now.
So while you're waiting for them to make up new boarding groups, you can order your dream car and the dealer will have it ready in no time.
Now boarding groups 1 through 7.
So close. Visit HyundaiUSA.com or call 562-314-4603 for more details. Limited availability, pickup through participating Hyundai dealer in select markets.
Today on The James Altucher Show.
People say, well, when you're renting, you're just throwing money down the toilet. I think owning a home is a bad idea. And in particular, it's a bad investment. I think people have been scammed into thinking that owning a home is the quote-unquote American dream, the white picket fence, the yard, the safe streets for your kids to play.
You own a house, you never really own it, right? You're paying property taxes whether or not you have a mortgage, right?
Right. So that money is gone. Like, that money is gone now. Previously, you had $200,000 in your bank account, and now it's not there. What are the characteristics of the ugliest investment? It's illiquid, which means you can't cash out whenever you want. In fact, usually the time when you want or need to sell your house is the time when you can't sell a house.
This isn't your average business podcast, and he's not your average host. This is The James Altucher Show.
New podcast episode that I'm doing with my good friend Doug Hill about what I would call not necessarily crazy personal finance tips, but personal finance that I would say a lot of people, if not most people, would disagree with me. And the reason I say that is because I've written about these topics before, and some people have been so angry at me as to even give me death threats. That's how important personal finance is for the psyches of many people out there. And I have with me Doug Hill, who occasionally disagrees with me. Doug, how's it going?
Occasionally, yeah, James. Now, you kind of buried the lead here. We first met, back when we first met, you were living a minimalist life.
Yeah.
Remember, you had no more than 11 items to your name at the time.
Right.
I disagreed with that. That was the first thing we ever disagreed on. I'm like, that's not a good idea.
Well, I didn't rent an apartment. I didn't own a house. So I just stayed in Airbnbs. We're going to talk about home ownership in a second, but living in an Airbnb is not necessarily more expensive than renting an apartment. You don't have to pay for any furniture, any utilities. I only had my 11 items. So just think of all the things in your house you've paid for. And that's whether you rent or own. You've got to pay for furniture, a bed is expensive, desks, all the things in your kitchen, place. Guess what? When I Airbnb'd, all that was supplied to me. So yes, maybe technically, if you added it up, I was spending more on an apartment in New York City per month than I would if I rented. But overall, when you factor in all the other costs, I think I was saving money. But what I really want to mention is I think owning a home is a bad idea. And in particular, it's a bad investment. I think people have been scammed into thinking that owning a home is the quote-unquote American dream, the white picket fence, the yard, the safe streets for your kids to play. The whole thing has been a marketing scam for banks to sell you mortgages that essentially enslave you to debt and to a location that you might be tired of, but you're stuck in. And much better to be free. Freedom is worth a cost. But in this case, freedom would actually save you money in the long run. And I could go into the details, but disagree or agree?
Yeah, I completely disagree. But I would like to hear the reasons behind, aside from I get the enslavement and the idea that you can't move as freely as you otherwise would. On the other side of that, though, James, when I walk outside my house and I look around, I'm like, this is mine. I can do whatever I want with it within reason.
Sure.
And there is a feeling of ownership and control that you get from owning a house that you don't get if you're renting.
I hear what you're saying, but that feeling of ownership, what does that mean? That was something maybe your parent, like that has to be given to you. You weren't born wanting or craving a feeling of ownership. Like humans didn't own things for a million years, and now they do own things. So
Yeah.
that feeling of ownership is some cultural thing. So I respect that. Like you feel better when you own something than when you don't own
Yeah.
something. But I feel better, for instance, when I don't own something. Like I can make the financial argument first.
Yeah, let's do that because that's the important piece, right?
So let's say, I'm just going to pick a round number. Like let's say you're buying $1 million house. Doesn't matter if it's a half a million, 200,000, but I'm picking a round number. $1 million house. Typically, people put 20% down. So $200,000. So that money is gone. Like that money is gone now. Previously, you had $200,000 in your bank account, and now it's not there. And then you're in debt, $800,000, and now you have to pay a monthly payment on that debt, right? You have to pay the interest. And the debt on a mortgage is, let's just say, I don't even know what it is now, 7%, something like that. So you're paying $70,000 a year. And so it's, what is that, like $6,000 a month roughly? And then you're paying property taxes, whatever that is, like another $1,000 or $2,000 a month. So $8,000 or $9,000. Then you're paying for maintenance. So like Doug, right now I'm staying in my house by myself. My wife is out of town. And there's just like random people like working all the time, like around the house. There's like somebody doing the lawn. There's someone feeding the animals. There's just things happening all the time that I'm paying for, I guess. Like the other day, there was a storm. The electricity went out. You got to pay someone to come in, and sometimes you have to tear things up and like replace your wiring or whatever. Like once a year, there's usually some big maintenance. This is hard to quantify. I don't know what people's average maintenance costs are, but it's more than insignificant. And supposedly you save a little bit of money by deducting the mortgage payment interest from your taxes. That's a tiny thing. And the other thing is, this has changed lately because of remote work, but you don't really have job flexibility when you own a house. I can't just pick up and move tomorrow. Let's say I have a job in New York City, and so I paid $1 million for an apartment, but now I want to get a job in Kansas City or Los Angeles. I can't just pick up and move because I own my house. And,
Right.
So people say, well, it's an investment for the future. But if you think about it, what are the characteristics of the ugliest investment? It's illiquid, which means you can't cash out whenever you want. In fact, usually the time when you want or need to sell your house is the time when you can't sell a house, like when housing prices crash or there's a recession. There's high leverage. You have to borrow a lot of money to buy your house, and you pay it off over maybe 30 years. So you don't really own it for those 30 years. And there's no diversification. So when you own a portfolio of stocks, okay, you could buy and sell any of the stocks on any day, like any minute when the market's open, you can buy and sell a stock. Also, you own a whole bunch of stocks. It's diversified. But you're probably the biggest part of most people's personal portfolio is this giant illiquid investment called a home, which you can't sell. And it certainly is not diversification. It's probably 50% or more of the net worth of most people. So these are just financial reasons, like forgetting about the personal reasons. So my overall argument is it simply costs more. First of all, on the monthly, add up the property taxes, the maintenance, the interest payments, and whatever else. What is it, condo fees, or when there's a homeownership association, you have to pay fees there, or you have to pay a garbage company to pick up your trash, and there's utilities, again, the maintenance. So the monthly costs are probably as much or higher than rent. And when you buy the house and you have to put the money down, by the way, when you add up all the interest payments, you're paying like a multiple of what the house costs. And when you put the money down, that money is gone. Like, let's say it's $200,000 down. That's money you could have been making, let's say 5 to 10% a year on compounding in, hypothetically, the stock market. But that money is just gone. Like, it's nowhere.
Well, that money is now equity, right? So that will increase as the value of the house increases, unless something dramatic like 2008 happens and you have to sell during 2008. That money comes back to you at some point. It's not like it goes into a hole and you can never get it out.
At some point, but the return on a house is not greater than the returns on almost any other investment, like stocks, bonds, whatever. Actually, it's interesting. The 2020s is the only time in the past 100 years that the average return on the house so far has been a little over 10%. It's always been lower. Like in the 2010s, the average return on a house was 3.8%. Stocks was 13%. In the 2000s, the average return on a house was 4%. In the 1990s, it was 2.7%. So it's only been in the 2020s, because of COVID, there was inflation. This is not even taking out inflation, but with inflation, it's 10.2%. There was more inflation. And just like in the early 1980s, or 1970s, there was inflation. So it was 8.7%. That was the next best decade after the 2020s so far. So it's not like a great investment anyway.
Yeah. Yeah, I think you bring up a lot of good points, James. It's hard to argue with you. You used to be in debate club, right?
No, but people hate me so much. Sometimes I have to be able to defend myself occasionally.
Yeah. Well, you're doing a good job. Yeah. I think you're right. I mean, maybe there's this assumption that people make when they own their house, they're going to make money. I mean, my personal experience, the house that I'm in right now, I bought it for X and it's almost X times 2, right? We've put a lot of money into it, a lot of new capital into it to do kitchen and bedrooms and things like that. But the way I look at it is when I move out of this place, whether that's in 5 or 10 years, whatever that number is, that the profits that I'm going to make from selling the house, assuming that I still make profits, which I think is a pretty safe assumption, that's going to be kind of like found money for me, right? It's going to be almost like I've saved it in a way that I probably would not have saved in another asset class, like putting it in the stock market or putting it in the bank.
Why is that? Because it's sort of a big chunk all of a sudden.
Yeah, exactly. Like you're going to redo your kitchen, that's a large number. That goes into the house, elevates the value. That money, I don't know, I probably would have stuck it in the savings account, which would have made me 3 or 4%, whatever the number is.
Yeah.
And I get to live at a higher level, right? Arguably, that's why you increase the value, build a new kitchen so that your every day-to-day living situation improves. So there's intrinsic value in that. But yeah, from a pure financial position, I mean, you own a house, you never really own it, right? You're paying property taxes, whether or not you have a mortgage, right?
Right.
So if I wrote a check today and paid off my mortgage and the bank goes away, I get the deed, I'm still paying whatever dollars every year to live on this property to the state.
That's a good point. And you can't control that, by the way. They can arbitrarily say, oh, your house is worth X and now you owe $5,000 a month in property taxes. And you could argue it, maybe you get it down to $4,000, but it's hard to make that happen. And you still have the maintenance, which is unexpected expenses. Like you might not be ready for it and suddenly have to redo all your wiring or cable or whatever. Take a quick break. If you like this episode, I'd really, really appreciate it. It would mean so much to me. Please share it with your friends and subscribe to the podcast. Email me at altucher@gmail.com and tell me why you subscribed. Thanks.
This summer, Pluto TV is exploding with thousands of free movies. Summer of Cinema is here. Feel the explosive action all summer long with movies like Gladiator, Mission Impossible, Beverly Hills Cop, Good Burger, and Transformers: Dark of the Moon. Bring the action with you and stream for free from all your favorite devices. Pluto TV. Stream now. Pay never.
You just realized your business needed to hire someone yesterday. How can you find amazing candidates fast? Easy. Just use Indeed. Stop struggling to get your job post seen on other job sites. With Indeed sponsored jobs, your post jumps to the top of the page for your relevant candidates, so you can reach the people you want faster. According to Indeed data, sponsored jobs posted directly on Indeed have 45% more applications than non-sponsored jobs. Don't wait any longer. Speed up your hiring right now with Indeed. And listeners of this show will get a $75 sponsored job credit to get your jobs more visibility at Indeed.com/PODKATZ13. Just go to Indeed.com/PODKATZ13 right now and support our show by saying you heard about Indeed on this podcast. Terms and conditions apply. Hiring? Indeed is all you need.
The other thing is, let's say you have this chunk of money at the end. What do you do with that money?
Well, I invest in your crypto picks, James.
But where are you going to live?
No. Right. Well, yeah, that's the next thing is like, well, that's of like downsizing and finding a new place to live. I mean, if I had to choose, I mean, I love Virginia, but it's a very expensive state in the northern part of the state. But if I were to go someplace less expensive, someplace more out of the way, arguably you're going to get a better place for less money. But yeah, that's a good question.
So, but that's a trade-off, right? So there's some aspect of the quality of life that might go down because you might not be near a city or a cultural center or whatever, but but there's a trade-off. You might get a bigger place with more property,
right,
and so on. But you're just going to take that money though and essentially put it all into another house. Like, this is why once you put that first down payment down, you really never see that money again. It's gone because it's going to go from house to house.
Yeah, and if that's the case, I mean, like, once I sell this place, if I buy a place, it's going to be a lot smaller. We got this when we had kids around. Now it's just me and Mary. So, and just to compound the issue, I just bought a place down in Dominican Republic that we're having built. So not only do I own one house, James, and I own two, really just flying right in the face of your argument.
But that might not be. So I say never buy a home, but what the place in the Dominican Republic, that is like an investment property, right? You're going to rent that out. So then, for whatever reason, that's when people sit down and do the math. They don't do the math on their actual home that they live in, but you figure, okay, I'm going to pay $300,000 for a place in the Dominican Republic. I'm going to pay this in mortgage. I'm going to be able to charge this in rent. The management company has told me they take care of the utilities and other stuff. It's all going to cost this. You have a very clear idea. Oh, I'm going to make $2,000 profit a month. There might be an occasional small maintenance thing, but not really. So you do the math and you say to yourself, at least I'm going to make all my money back and then the house will appreciate and I'll make some money. You don't do that math on the home you're living in because you're not renting it out. You're living in it. So all those expenses, whether it's, property taxes, maintenance, interest, all that is borne by you. And when the interest is borne by you, then the total price of the house, like, my whole point is that it ends up, you never really calculate. I don't know anybody who actually knows the cost of their house. I don't know the cost of the house I'm living in.
Oh, no, that's above my pay grade.
But
right?
I bet you do know the math on the Dominican Republic thing.
Yeah, because that's more recent. But yeah, for example, I don't know what our property taxes are here.
Yeah, even though you pay them every month.
Every year, but I'd have to ask Mary, and Mary would tell me.
But every dime, and it's not because, I don't think it's because it's recent. Every dime of the Dominican Republic thing because your goal is to make money. So you do more due diligence on the number.
Yeah, and we're going to go down there and visit there as well. But I think for the most part, like 10 months or 11 months out of the year, that thing will probably be rented, or I'll attempt to rent it. So, but I do know the numbers. I do know what the expected cash flow is, to your point.
Yeah, because you had to study that to make a purchase decision. Like, when people buy a house as a home, of course they do the math in their head, like, can I afford this? And what's my monthly, expenses going to be? But they really are just looking at, this feels like it. Like, somebody says, this feels good here. Like, there's more about feelings and not about actual numbers. And furthermore, so, okay, people say, well, when you're renting, you're just throwing money down the toilet. I would dispute that by saying, no, I kept my down payment. So now I either can sleep more easily at night because I have plenty of cash in the bank and no debt, or You could say, I'm going to invest this money. Maybe $200,000 down payment would have been investing in or starting yourself, like 4 or 5 different startups or more. So
Yeah.
there's so much opportunity cost with that down payment, I feel. Like again, I don't know if your house is higher than $1 million, less than $1 million, whatever. But with $200,000 just sitting there with the goal to eventually make money from it, you might invest in a good investment. You might you diversify. You
Yeah.
might start a company or help your kids start a company. And you're still paying the same amount per month, roughly, like rent and all the other costs. Sometimes it's less, sometimes it's more. People say the rent matches that usually, but I don't know if it does. Sometimes it does,
Yeah.
sometimes it doesn't.
People usually buy a house or a car based on what they can expect to pay per month. And whatever that gets them, that's what they get. And like you said, they'll do the math on, can I afford this home? Oh, it's $3,000 a month or whatever. I didn't get the home, so I'm going to go rent. Well, I could spend $3,000 a month.
Right. So you're spending the
Right.
same amount per month, more or less,
Yeah.
but you're out the $200,000 down payment.
Right.
Now you say you get it back. But okay, when are you selling your house? You selling your house next year?
No.
When are you
No.
going to sell it?
5-10 years, maybe.
So, okay, when you're in your 60s, if I may be so bold as to say.
How dare you? How dare you?
And so you've been buying houses. Presumably you haven't been downsizing since the very first house you've owned. You've probably been buying better and better. So basically, that initial down payment, you've never seen the profit on it until finally, if ever, you make the decision to downsize. So it's like a 40-year period that down payment is just gone from your life. And it was a big amount when you first put that first down payment down.
Yep.
And in some
No, you're
points,
right.
you didn't sleep easily at night because you were worried.
Yeah, there were 2008 period. That was a tough one.
Oh man, I lost my house during that period.
Yeah, I mean, 2010, I lost my job and we had to move, and yeah, it was no good.
Yeah, and like just when you need to sell, that's the time when you can't sell.
Right.
So again,
Yep.
characteristics of an ugly investment. It's illiquid, you can't sell when you need to, and it's not diversified at all.
So James, what do you call that? So like, you've convinced me, right? All right, yeah, it's probably not the best investment. Financially speaking, is that the left brain, right brain? I don't know. It's one side of the brain that is deciding, okay, this may not be a good investment, but I'm not gonna sell my house because you've proven to me that it's a bad
Right.
investment. I'm still gonna own my house. What is that, like a cognitive dissonance or something?
No, because you've already said there's other reasons. There's like these ephemeral reasons, like you just feel good owning something. Like even though, like you said, first the bank owns it, then the government owns. Even after you pay off the bank, the government forever can take this away from you. And but you could change the walls. No one's going to kick you out. If you love the place, a landlord's not going to kick you out because he decides to live there himself or has someone else or he wants to jack up the rents 5 times. Like you never have to worry about that. So you're paying for some degree of peace of mind. Although the counter aspect is that when you're stressed about your house, it's a really stressful situation. So that's, but maybe you have 5 years of peace of mind for every 1 year of stress. Maybe it's even 10 years of peace of mind for every 1 year of stress. But again, there's this idea that you're trapped a little also. If you lived in New York City during COVID and prices were down because so many people were selling and you wanted to leave too, but you couldn't because you couldn't sell and make enough profit to put a mortgage down on the next place. So sometimes you're stuck. Like factories would sometimes lend the money for employees to live in the factory town because they don't want people to have any flexibility to move. They want the factory workers stuck. They can't auction themselves out to the highest bidder. They have to just stay working for the factory that maybe pays less. So there's kind of this thing of being trapped that I don't like. But okay, maybe you said, okay, I know I'm going to work around here. There's plenty of jobs. I don't really need to move. So, and then the other thing too is you and I might be different. Like I tend to think you like a little bit working on your house. Like I've seen you in situations where you didn't like it, but
there were lots of those early on when we first bought this place. We were going to build, but then we couldn't find the land we wanted. This had the land, but the house was a mess. So we wanted a project. We just didn't want this big of a project. But yeah, now that we have it, and now that it's 8 years now, but we After about 3 or 4 years of really working on it, we were very happy. But yeah, it took a lot of time, and there was a ton of stress early on getting it to the point where we could actually live in it.
Yeah, and look, despite me saying all this, by the way, I should, full disclosure, I own my house.
James, you stole my thunder. I was going to be like, okay, James, that's a good point. Why do you own a house again?
Well, okay, here's the thing. And this is not like a sexist thing or anything, but I think in general, women like to own a house more than men do. And I think, who knows? I don't know if this is true or not. It's just my own experience that women tend to like to own because it's like their nest that they build to raise kids in, and they want kids to be safe. And I get that. And also, I think, typically, historically, men have earned more income than women. So for women, this is historically, it's been a good way to claim, some equity for their own. They can't own your income. Like there is divorce law where they do own your income. And I think that's correct and fair. But with a house, they can really own half the house. And so I think there's different cultural reasons, at least in America, why women like home ownership, maybe a little bit more than men. Now, I'm not saying all men hate owning homes and all women love owning homes. Just that's what I've noticed in my own personal experience. And my wife really wanted to own a home. Robin really, really wanted to own a home. This is like all she would think about. And so because I just cave into what everybody else wants, I also have a hard time choosing myself. We bought a home and it did feel like it, quote unquote, and we got a good feeling when we looked at this place and so on. So,
well, James, I feel like you should be laying down on a couch somewhere during this conversation.
Well, I'm curious what the listeners think. Do you think it's right? Forget about what you personally do. Just after hearing this argument, and it doesn't matter what you personally do. There's lots of reasons why people own or don't own more than just what I've said. But do you think it's a good financial investment to own your home or not? Let me know on Twitter @JAltucher. Send this to your friends who are debating whether to own a home or not. And the next issue or the next episode of this crazy personal finance, I don't know what we're calling this, crazy finance or crazy personal finance, is going to be about a topic near and dear to the hearts of probably about 100 million people in the U.S. So, Doug, thank you so much for being the counterpoint, and we'll go on to the next episode.
Thanks for having me, James. I'll do this anytime.
This summer, Pluto TV is exploding with thousands of free movies. Summer of Cinema is here. Feel the explosive action all summer long with movies like Gladiator, Mission Impossible, Beverly Hills Cop, Good Burger, and Transformers: Dark of the Moon. Bring the action with you and stream for free from all your favorite devices. Pluto TV. Stream now. Pay never.